Hello, everyone. How you all doing tonight? Hopefully, all is well. Awesome. Definitely a great day. Felt awesome to get back into trading. For those of you that don't know, I was not trading during election week and wasn't even sure I was going to be trading this week, but seeing it was all dependent on price, and price was at a place where I could consider trading. As you guys heard, if you were in the weekly outlook, we had a nice outlook and some nice movements predicted into the week. And speaking on that note, what did we discuss? Well, we are looking first off in the start of the week for retracement. Now, that retracement can end at our first fair value gap, or we could go all the way down here, look deeper into the fair value gap. We noted the specific level of our old swing high for more precision, right? But I did discuss that I would start looking for longs at the point that we are in this fair value gap. But there's one thing that we have to note: order flow, right? Forming a swing point on the daily, right? Forming a daily swings to form your extremes of the week takes time. But what does Tuesday show us? Well, Monday, right here, formed a high. Tuesday confirmed that high by continuing the expansion lower. Now, yes, of course, we did not close aggressively in any way. I'm not talking about trend. I'm not talking about direction. I'm talking purely about market structure. Now, that market structure can frame me taking trades and later targeting this as current week's high. What I'm trying to explain here is that whether you shorted towards this fair value gap or a retracement lower, expecting more so of a consolidation week due to the very large expansion we had last week, as discussed as well in the weekly outlook, or you took longs off of this higher time frame point of interest, targeting previous day high and looking further for the current weekly high, which formed a swing point, right, on Monday's high. Both ideas were valid. Now, some traders on days like these, especially when talking about ICT traders, right? I'm not going to name anyone. It's just a way to look at the markets. Some traders will tell you it's unclear, right? I can frame both sides, so I shouldn't be trading. I don't believe in that. My model adjusts for conditions so that I don't have to. So whether we are in trending markets, whether we are in ranging markets, both give me setups. And in ranging markets, I will be able to frame both directions. So I will just be more aggressive with my take profits. If you guys want more concrete evidence, I'll show them once we look at the setups later. But what I'm saying is that my partial objective would now be my main objective, right? So I just adjust my expectations when we are in ranging conditions, but I still take the same setups. And I do understand that when we are consolidating, I will be taking trades in both directions because there is no daily expansion. But when we are trending, I'm going to be trying to catch the daily expansion, which is a one direction move, right? Distribution. Didn't want to spend the time to discuss this, but we have our levels. What else do we look at? Previous day high, previous day low. Now we can clearly see right on the daily chart that there is SMT at previous day high, right? So we're going to just mark out this level and go on our lower time frames to see the sequence leading to that SMT. As always, higher time frame is clear. Why would I go to any other higher time frame chart, right? Daily is clear. I'm not going to go waste my time and go on a 4-hour, 1 hour, 12-hour, 1 hour. Again, that is simply my opinion on the matter. But I like a simplistic approach. And a simplistic approach doesn't take 50 steps. It takes one. Daily chart, I got my understanding. I was looking for shorts towards this gap and then longs. What did we have? Well, the morning we had inducement of this gap. And I'm talking pre-New York Open, pre-CPI. Why is this inducement? Well, we are forming equal levels here. And no, I'm not talking about this low, but this low has no SMT, right? If I'm looking for an important point in market structure, I'm going to be looking for that level to be formed with SMT, as our logic always entails, right? We look for a raid at a specific time with SMT. Well, there was none at this point. So can I consider these levels important points in market structure? Not at all. These are only liquidity pools. So due to that, I was not confident in us leaving this level, for example, right? Leaving this level, keeping this as our low, rebalancing the level, and then looking for longs. I was more confident in shorts returning to this level at the point where we took out this liquidity on both assets and then induced this level, to be honest, right? We did not take it out, and there was no SMT at this point in time, but to be expected on a consolidation read, right? In ranging markets, we're going to build up liquidity on both sides of the range. So it's a little bit weirder, but as you can see on the highs, what is this? This is inducement, right? We are forming liquidity in close relation to one another. And the same thing that we did right here. We're inducing both sides of the range. This is what I mean when I say arranging markets. We form a range and we're just going to keep expanding back and forth within that range until one side is rated. Which is why, as you guys might have seen on my Twitter, I did a post about the lunch rate framework, the short framework, why you could justify taking a short also in the late afternoon. Definitely a very beautiful day to come back to after not trading since the election. So I was extremely happy on that end. Now, as I said, due to there not being SMT here on the lows, and if we look right here, there is SMT on the highs, right? Right here, let me actually point it out instead of me just talking. You guys will have some visual support. Let me put it right here as well. So we have SMT at this point in time. This is London high. All right, we do have to remember this level. It will be of importance to us. London high, SMT. What does that tell you? Well, nothing. I don't trade London personally, right? I trade New York. So what am I going to be interested in? Well, today is CPI. So I'm going to be interested in 830, but I understand that this is an important part in market structure. We formed SMT to push us lower. Did not form any SMT at the lows. Does this tell me anything? Yes. Is it worth my time to know what this means? No. What is worth my time? Equal levels. This is a big draw on liquidity. This also aligns with London low that we did take out, if I'm not mistaken. Yes. So London low is the low from 2 to 5 a.m. All right, in my book, at least. As you can see on ES, we did not take out this level, while on Nasdaq we did. So actually there is SMT here, just on a lower time frame, right? No 15-minute SMT, but there is lower time frame SMT, leading to our news. Now we always say with CPI, it is oftentimes going to run on side with price, correct? This is what I always say. I say that if there is news to not anticipate manipulation, it is that one. But what did we get instead? Inducement. So the news went higher, and it was not manipulation. It was inducing our liquidity before manipulating lower and then distributing higher. This is how I frame my daily power of three. So just in general cases, right? As I said, I want to bring these reviews more in depth. So I'm taking you guys through the steps that lead to my understanding. So for me, it was about being able to short until a major objective has been reached. Like for example, ES removing the SMT from this area, right? Bringing back balance, taking away a key point in liquidity, time-based liquidity, of course, London low, which completes a framework. Now, from this point on, I could look for reversals at this level. Moreover, it is 10 a.m. What happens at 10 a.m.? The open of our 4-hour candle that frames the end of the New York AM session into lunch, into the lunch, right? So from 10 a.m., I can frame 10 a.m. power of three, open, low, high, close. We'll go down to a lower time frame to see if that long opportunity led to any sort of trades, right? Because it's not because you have an idea, and even if that idea works, it does not mean you're going to get a successful trading setup from it. And that's oftentimes the hardest thing for people to accept, is that you can be right without making money. And it's especially hard to accept when you're not making money outside of this and when you're not a profitable trader yet. But once you actually do understand that your model is not about making you money, it's about being consistent, right? If it can consistently win, money will be a result of that action. So if we look, for example, my model personally, that I share with you guys is the rise model. We look for unicorn entry model. We have our higher time frame point of interest, which I will now put a little lighter because it was hurting my eyes there. So, daily fair value gap. I can start looking for longs at this point. Now, we could look at 930. Well, actually, you know what? We're going to look because as I stated, I would be looking for shorts until this objective is reached once again. And more importantly, these liquidity have been hit. And personally, there are some news, some 830 news that make it so that I start trading before. Sorry about that. Before 930. I was choking there for a second. I will grab some water very quickly. All right. So, as I said, there are some news that lead to me trading before 930. So, for example, at NFP, I start trading at 830. Same thing with CPI. But having the perfect setup, which I did not intend to share, but why not, right? There is an inversion fair value gap entry that overlaps with this breaker block with news raid confluence. So this is the news range. As you can see, 830 formed a swing point at 831, rated the highs to go target the lows. This is something I've been speaking about a little more over the last month. But you have a very clear unicorn setup, a very beautiful stop loss. If we look 1 PD array, 2 PD array, 3 PD array, very decent stop loss here, not tight, not loose, giving you 3R to this objective, and to your lower objective right here, you had almost 5R, sorry. I was looking at even another objective here for the 7R. Now, this is a setup, clearly. Is it a pessimistic setup? No, because most traders, and including beginners, will start trading at 930 because that's where volatility is anticipated. That's where a Judas swing is anticipated. But I didn't want to share it very quickly with you guys. This is not something we'll be considering, though, because we have a pessimistic approach to these reviews. So you'd be waiting till 930. At this point on, is that same short idea still valid? Yes, until these levels are reached. I can start looking to short, and from these levels, I will start looking to long, as we explained when we were looking at our intraday chart just a few seconds ago. So what do I need at 930? Well, I need a bearish breaker that overlaps with a bearish fair value gap or inverted fair value gap to give me an entry signal, and I need SMT. Do we have SMT? Yes, we have divergence. As we oftentimes see recently, we have very high resistance price movement, engineering liquidity, consolidation, however you want to frame it, right at 930 open. And that leads to very aggressive divergence. Now, when will that divergence stop? When we have a clear raid. Clear raid comes with energy. Now, I could show you the exact high that was formed here on ES and tell you how we closed aggressively above it compared to this high when we swept it. We did not close above it. But again, pessimistic, right? So let's look at it simply. How could you, in the simplest form possible, filter and find a setup? Well, look at the first breaker to form. What is the first breaker to form after 930? Right here. Now, this one might be a little tricky to spot, so let's go over the steps. What do we need for a breaker? We need a range. Now, speaking about a bearish breaker, it will be a bearish range. Then we need a raid of that range to then displace in the opposite direction, which will form your breaker range. What do we have right here? We have swing high to swing low, followed by a raid of that range, and then displacement below, which led to the formation of a breaker. Do you guys see it? Do you have any questions? I know I'm dealing with a wide array of experience here, and I'm not seeing any one type, so I'm guessing no questions there. I will leave the standard deviations. This is our breaker range. Our breaker block will be the last down close candle in this case. From this point on, what am I looking for? Well, as I said, I need a bearish fair value gap or a bearish inversion fair value gap. Those are the only criterias I need left. What is the first one to form? So we don't bring any sort of discretion to it. What is the first one that gives me an entry? Not the best entry, not the one that gives me the most RR. What is the first one that formed? Well, the first PD array that formed was this fair value gap, and we inversed it. which gave you an entry right here at 947. And if we look, where would your stop be? Well, I have fair value gap, order block, and then I have nothing above. So what am I going to do? Well, is there SMT at that highs? There is SMT at that high specifically, right? So I can regard that as a PD array. What about the entry at 943 in the fair value gap bearish? I'm guessing this is 943, right here. In this bearish fair value gap, you mean? This bearish fair value gap was old, okay? And it is not a very simple. Wait, let me just make it so I can see it easily. All right, right here. So first of all, this fair value gap was old. All right, so I tend to want to refer to recent price action, especially when we're discussing the New York Open. I'm not going to look at PD arrays beforehand. But as I just said, that's not pessimistic. That's bringing discretion into it. But what is here? A full closure inside the fair value gap. Multiple times we have mitigated this array. We have rebalanced this array. The fact that it lines up here, close to it, then close to it again, showcases exactly what we can see from here. This is not an important array, and it has already been rebalanced. When I discuss inefficiencies, it is inefficient price delivery, unbalanced. So I go inside these inefficiencies, or I balance these inefficiencies and use them once again afterwards because they are unbalanced and I need to balance the delivery inside of them. Here, we already mitigated multiple times this fair value gap, and as you can see from the result, we did not, wow, that doesn't work. We did not utilize this array at all here. So yes, looking at it, is this a fair value gap? Yes, until when? Until this point. So technically, this could be an entry, right? That's what you're telling me. Yes, at this point in time, it is a fair value gap. In my book, it is no longer an inefficiency due to the fact that we've already revisited quite a bit. This is something I talk mainly with private students. I have yet to discuss it in a peer review, I believe. So thank you for the question. So in my book, as I stated, this would not be, sorry, not this one. This would not be a fair value gap. This would not be, well, it would be a fair value gap. It would not be an imbalance that I would be looking for. So I know it's a little weird. And anyways, if you're looking at this fair value gap, the entry would not be at 943. You would have entered right, when did we form the breaker? Well, actually, yes, you would wait till for the formation of the breaker. So yes, it would be at 943 right here when we traded back into it. Would have been a better entry than this in any cases, right? So sadly, not what I was looking for. And as we stated, you'd be looking for these relative equal lows to be hit. You could take a partial at this point, but when I have liquidity in close relation like this, I like to just hold all the way. I'll hold the, 13 handles, because I expect it to run through both liquidity very aggressively, right? So I'll just hold on to the next one, 2.13. I'd be satisfied with that because, as we said, those were our objectives. We were trading a retracement lower to distribute higher. So that would be the main objective. Now you could hold, of course, till the reversal range and then hold a final runner till 4. But when I'm trading retracements, especially in ranging markets, I like to be conservative. Relative equal lows, liquidity that is close in alignment to London low, but not London low. Those are very important points for me. And then, as we stated, from that point on, you would be looking to long. Now for long, the only thing missing right at this exact low for me to just click the button randomly, right? Forget PD arrays, forget anything, right? Very clear move just in terms of delivery is SMT. We did not have any SMT until very much later, which I'm expecting there to be SMT, but I did not even verify. So I'm going through the swing points right now, looking for SMT, which I do not seem to find. So let's see if there was even any SMT. Right here, this is all lower. Now this is higher, and now here it is. This should be SMT, correct? These are equal levels on ES, and these are lower lows on Nasdaq. Now, I usually say that for yes, when it touches a level, it is mitigated. Now, for the sake of this review, we'll look at it differently, but I would have waited until a later SMT that came at this point in time. And if you look at the time, where are we, right? All of this high resistance retracement higher. You could have skipped all that by waiting one simple thing. When do we expect reversals? When will price spool against profitable AM traders? 1050 to 1110 macro, right? These are things that we are always looking at constantly. And then what do you have at this current macro? Well, you have your first breaker block to form, as always. You're not cherry picking here, you're taking the first one. And yes, we can look to the left, which we will in a second, but I want to talk about the right setup that would be framed during the macro first. What is your first PD array that it retraces into? That gives you an entry, fair value gap, bullish right there. Then you have an inversion fair value gap here and an order block, which gives your stop to the swing low where there was SMT. And then you'd have your retracement objectives, of course. How do you establish those? 5 minute, you'll look at the current daily range. So at this point in time, what would I be looking at? Here. And yes, my objective is all the way up there, right? Let me just mark out the premium discount. My objective is all the way up there, right? This is specifically previous day high. But I would be looking at this range as the latest expansion, which I'm going to be flipping, if I might say. Now, the first inefficiency in premium is actually liquidity in this case. And if we look at this, these are all failure swings. So I could force it and go all the way up here. I would like to see some sort of confluence from what? From standard deviations. Why am I using this one? Because this is the breaker that was formed with SMT. So I understand it is a more important part in market structure. That brings me confluence to go target all of the highs of this low resistance, right? It's funny how it always lines up. And you might believe these are prepared, but I go at it blind. Of course, I traded the day, so I know what I was looking at for the specific day. But these things just align because that's how it works. Specific time, signal, market structure. First premium inefficiency is right here. Gives you confluence to go target the next one because our reversal, if we are going to reverse, is going to target all of these low resistance failure swings and go for the reversal zone, which we did. And that's where you could have taken your partial. Now, is this the pessimistic approach? Not at all. Once again, I am repeating myself, guys, so bear with me. Our first inefficiency in premium is this level right here. So we are going to disregard this better level for the sake, once again, of pessimism. Looking at it, 2.88R. Now, let's be honest here. Am I really holding along here that came all the way down here and it wasn't yet break even? Well, all depends on RR. If I have a high probability objective like New York Open with confluence from one standard deviation of my breaker at 2R, I'm definitely taking a partial here, taking the stress out of the position and putting my stops break even, which would lead to me getting stopped out right here. And yes, in this case, what is the result? Well, I lost out on money, lost out on a potential reward, but I was conservative. And that is what leads, for me personally, to a calm mind and a nice equity curve. Now, this is all in relation to personality and psychology. I like to be comfortable in my trading. I already put a lot of risk into it. Trading is a very risky business. So I like to be conservative and safe with my positions. So if I have money, then I'm going to take out money, put my stops break even, and then leave my charts, right? How much time did you spend on your charts? Barely anything. And to be honest here, I was already in the short, so I was done for the day way before this point in time. And if you would have taken the short at the open, I would have wished to be done for the day at this point in time. But you had a high resistance move to the upside, which if you held on through all the way, definitely led to some very nice reward, right? If we look beforehand, for example, if you did not trade the macro, it's still the same things, right? You're looking for the first breaker to form, which seems to be this one, unless, well, there doesn't seem to be. Oh, well, yes. There is, sorry, a bullish breaker formed right here, and then you'd be looking for an overlapping PDR rate to take your entry on, which would be this one. I would have considered that one, right? The low of this is in very close proximity, so I would have considered entering on this one. And then fair value gap, order block, your stops would be at this low. This would have led to a loss. Is this the end of the world? Not at all. What does this mean? Well, I took a loss. Is my idea still valid? Yes. What are we doing? Consolidating. What am I going to wait for? Time. So even if you traded this, don't let this get to you. Losses are part of the game. You're not always going to catch the perfect low and the perfect entry. But if you follow a mechanical approach, it would have led to one loss followed by a win, and started with a win as well. I think I saw a breaker form with SMT and 950 to 1010 macro. Let's go look, because as I stated, I did not see any SMT. You're saying 950 to 1010, so you're probably looking too long at this point. But like I stated, I would have waited all the way to this liquidity. Personally, I was short at this point, but I would have waited for all of this liquidity to be reached, because as we stated, that was our objective. So if your bullish breaker is anywhere in here, which I am guessing it is, then it is invalid because our objective to the downside had not been reached. All right, so no, after liquidity. So 950 to 1010 right here. No. Unless, well, here, you said with SMT. Let's look very specifically. No SMT. And then here, there is no SMT once again. No SMT. I'm looking at the highs as well, by the way, and I don't see any SMT at all. No SMT at all during the 950 to 1010 macro, right? Am I mistaken? There is clearly lower time frame SMT, but you're probably referring to this candle. This is not a swing high on ES. So there is lower time frame SMT, but I'm not interested specifically in below sub 1 minute SMT. Is this what you're speaking of? So yeah, this is not a swing point on ES. This is not of very big importance to me in this specific case, right? In this specific regard. But nonetheless, yeah, it would have formed a breaker here, which would have led to this being an entry and then holding through the consolidation. If you left your stop wide, I believe I saw your message today, Justin, where you got stopped out, right? I would have gone and stopped out very quickly on this, just because, as I said, I like to bring my stop to break even aggressively. If it's consolidating, it's going to give me other opportunities for the same exact move, as you can see here. When does this opportunity form? Macro. SMT. Everything aligned. It was me leaving because of the consolidation. Well, too bad. It happens, right? I was very satisfied with the short from the morning, and to be honest, you shouldn't be results oriented. And yes, the bigger trade was a long, but the easier trade was the short. The short, you made what, 2-3 R, and I'm not talking about the short before 9:30 open. The short at 9:30 open, you made what, 2 point something R in 10-15 minutes, whatever it was. Let me actually check. So the entry was right here, and all the way down to hitting this 18 minutes. This you would have held on for a long time, which is not necessarily bad. If you've taken profits, you can be quite comfortable being break even and holding through this. But this was a high resistance move right up until we had a lunch expansion, which is low probability, which led to this, right? So definitely I wouldn't be scared about that. I would have definitely come back for the PM though, which led to some very, very nice price action, if you ask me. We'll be heading into that for a second right now. Any sort of shorts framed in the PM, right? I did a Twitter post about it. We are going to review it together anyways. Any sort of shorts in the PM for myself were framed as retracements lower. That was my whole idea. So when I'm trading a retracement, I have a retracement objective. What is that? I'm looking for an intraday retracement. I am on my intraday chart, which is a 15-minute time frame for those unfamiliar. I'm looking for the first inefficiency in the opposite direction of my range. bullish range, I'm going to look at the first discount inefficiency because I'm shorting for a move lower. What is the first discount inefficiency? Bullish order block. Order block bullish. Let's actually mark this out as our 15-minute bullish order block. And as we can see, we hit it right there at around 3 p.m. If we go back down to the 1 minute, what frames this idea? Higher time frame level has been rated, previous day high, with SMT at a key level. What does time tell me? Judas swing of the start of the PM session, right? 1:30. I am anticipating manipulation at the start of this. 1:30 manipulation higher. I am going to mark out the PM open for ease of visualization. By the way, for those curious, this is how I utilize it. I like to mark out the 1:30 open because it helps me visualize a Judas swing. In this case, specifically as well, we had a lunch framework, right? We're looking at lunch highs to lunch lows. Lunch highs were rated right here, right? And you're looking for a framework to go all the way to lunch lows, which were right here aligned with New York Open, actually. And if you look, it's funny, as I said, how everything just seems to line up. Time-based liquidity, first discount and efficiency, retracement objective. And of course, we went lower afterwards, but we had a move lower, retracement, and then continuation. We had a clear move lower before any sort of retracement. Where did we go before even retracing? 15-minute order block, lunch low. And now you might say, okay, well, look, there must be a loss in here, right? Because here is your lunch rate. So from this point on, I'm looking to short. Well, first of all, I'd at least wait for previous day high to be taken. So that's just in your face right there. I'd wait for previous day high. And of course, I'd wait for SMT, but there is very clearly SMT somewhere here. Yeah, I can see it just at this one point, right? So let's just forget about previous day high for a minute. What do you need for a short setup? Well, the last remaining criteria is a bearish breaker. So I have a range right here. I sweep the highs, I sweep the low. What does this form? The last down close candle is a bearish breaker. So I have a bearish breaker. I have my lunch trade. I have SMT, right, between these 2 points. Yeah, let's forget about the higher time frame point of interest for a second. What is the last thing I need? I need a fair value gap or an inversion fair value gap. There are none. There are none. Even if you were looking to enter here, there are no fair value gaps or inverted fair value gaps. Now you might say, oh, well, look, there's this fair value gap, which we had time distortion through. I don't care about this. I wasn't telling you guys you can enter on a Gallo or whatever new PD array ICT just framed. A unicorn, fair value gap, or inversion fair value gap. There are none. So you'd be waiting for a breaker to form. This is why there was text in the picture I posted on Twitter. From this point on, I'm just waiting for a breaker, waiting for a breaker. Now that price has gone up here. Is my idea still valid? Yes. Everything is still valid. We just had to reach previous day high. It's even better now, actually, because we have SMT at a key level. And yes, there was lunch high, but what is the greater liquidity? Previous day high or lunch high? Previous day high. So my idea is still valid, even better. Oh, look, right after taking out previous day high, we formed a bearish breaker. Swing high to swing low, taking out liquidity, breaking back below it. And why don't you look, our first inefficiency to give us an entry, right? First, actually, fair value gap at all in this point, right? We had a bullish fair value gap. No bearish fair value gaps were formed there up until later, of course. Gives you a very beautiful entry. Where would your stop be? Right here. Why? Because as I stated, there are no fair value gaps here. So you have inversion fair value gap as your first array, and then the order block as your second, and you have nothing else but SMT right here. Is there SMT here as well? No. So it's really that swing point, which I will mark out on ES just to give you guys a little ease. So it's right here. Little time divergence between these points, but there is SMT right there. And if you want to go even further, you can just say, hey, look, easy SMT to spot with the SMT with previous day high. So definitely a very clear short. In my book, very tight stop loss to at 14 handles, giving you a lot of opportunity. Now, as we said, your objective is the order block. Does that mean that I'm going to hold all the way there? No. And that is just a question of ease of mind, right? And the fact that I'm not always right. Sometimes I firm retracements, but actually, you know what? It just took out this liquidity and it was done and it reversed on me. Okay, so I want to make sure I have money out of the position at this point. So what am I going to do to find high probability objectives? Standard deviations. Oh, look at this. Equal lows, which I understand are more important than any given low, align with 4 standard deviations, which is the terminus of that move. Beautiful. It is that simple. That is my partial, and then I'm holding here. You want to take other partials? Do so, right? Relative equal lows right here as well. Clear liquidity at this point. All low resistance up until this point, you can. For me, it's all about maximizing profits after this. So this partial is about being consistent, keeping my consistency high, and paying the trader. And then it's all about maximizing profits on the rest of my position, which would have led to me holding all the way down to the 15-minute order block for beautiful 7.11 R total. Realized, of course, smaller since you took profit, but leaving you with a very nice trade. And those are all the setups that I would have considered for today. So as I said, very packed day, very beautiful price action in my opinion, even though that run up was quite high resistance at first, and that run down as well, you had some pretty nice expansions within it. Do we have any questions in relation to this setup? So we shared an initial short, few long opportunities with a short opportunity in the PM. If you're asking me, I either shorted right at open, or let's just say you missed that. I'm not considering any longs until 10:50 to 11:10. But the real trade for me, and the main trade I took today, I did take a small position pre-market, but I took that lunch trade, which was my best trade for the day. Are you half risk for tomorrow because Powell talks at 3 p.m.? That is a great question. And no, I will just make sure that my position is closed before lunch in its majority. So whenever Powell speaks in the PM, I like to trade the AM still. As I said, my model is also adjusted for arranging markets, but I will make sure that I don't have any risk going into that. So I will make sure that if I trade in the morning, I have taken profits a bunch before it. If my position is pretty close to break even, I'll just close it. And if not, I'll make sure my stop is at break even and that the majority of the position is already taken out. Does that make sense? Awesome. It was a great question, by the way. Have a good night, Big Freeze. Have a good night, all of you guys. We'll see each other back tomorrow for another peer review. Thanks for bearing with me for 40 minutes tonight. I guess I just started rambling, but it was a very packed day with a lot of opportunities and a lot of stuff to discuss. So thank you for being with us on this fine night for 40 minutes. As I said, I know that this YouTube video will have a lot less views. I wish you all good luck trading tomorrow, and we'll see each other back tomorrow night for another one of these peer reviews. Y'all have a great night.